Welcome back, everyone, to Vox Markets. My name is Paul Hill, and I'm delighted today to have with me Hall of Fame fund manager Andy Brough of Schroders, one of the smartest investors in the city. Welcome, Andy.
Yeah, welcome. Yeah, good to be here.
Just over the weekend, obviously, we've had some big news out of Washington with Joe Biden taking over. What's sort of like your view of the outlook for equities for the rest of the year, just sort of top level and 2021?
Well, I was quite interested with this concept of, where when you get ahead, you can stop. And as a Spurs fan, after the West Brom game, when we were top of the league, I immediately phoned the FA and said, "Can we have no more games, please? Stop the games, stop the games." Anyway, sorry, it's not often as a Spurs fan you can actually say that. But joking apart, I mean, the markets, as many commentators have often said, don't like uncertainty, and we might have a bit of certainty now. And I think before, if you go back to the first 2 months of the year, which seemed like a lifetime away, the consumer in the UK was in reasonable shape, people were being paid more, employment was high, the retailers were in good form. The ones I spoke to were really looking forward to the year. House builders were in good shape, and then we've had, COVID, the American elections, Brexit negotiate, whatever you could come up with at the start of the year, we've had. And now we get to the back end of the year, and actually I think we're in a similar sort of space. We've seen the Taylor Woodrow commentary today. The housing market seems in good shape. The retailers, I think, will probably come through quite well. Okay, you could argue it's on, government money being given to people, but wages were higher in September than they were in February. So, it's very easy to get very gloomy and think nothing's happening, no one's buying anything. I cycle to work, and occasionally I stop when I see an estate agent's board just to check it's not advertising a winter fair or something else that actually is a property that's been sold. So no, I'm reasonably optimistic actually for the run into the year end, and I think next year, animal spirits were out. I think a lot of people have said, well, there's a lot of changes to my job. I'm working from home more. I'm reinventing myself. One of my kids' mates has set up a business selling food to gamers, because actually that's all they do is sit there and haven't even got time for the shops. And he's turning over 100,000 quid, and he's only been set up 3 or 4 months. So I feel that entrepreneurial spirits will return.
Yeah, no, I'm with you. I'm pretty positive about sort of 2021. And it seems as though certainly there's been a bifurcation of the actual markets. You've got the big tech boys who are just on flying valuations. And then a lot of the value stuff. You say that UK house builders are still very, very cheap. Obviously, the financials are still at rock bottom, whether that's insurers, whether it's the asset managers, whether it's the banks. You've got sort of like 60% of the economy, which has just been in deep bear market. And then you've got these sort of like your tech guys who are just in a really raging bull market. And if you've had a tough 2020, I think actually it's setting yourselves up perfectly for a 2021, as long as you're not in the sort of the cruise liners and the airlines, which are still tough. But I think that's probably
yeah. You probably make a good point, on the valuation of tech. Valuation is in the eye of the beholder. But the market cap of Auto Trader is roughly twice the market cap of all the quoted car dealerships, including Inchcape, for example. Now you kind of go, well, but it's platform. Yeah. And I know, if you pop down to your local charity shop, there's a separate rail, isn't there, full of sheepskin coats from the old car dealers, which have been sort of brought in because they're no longer used. But one of my kids works in the car business, and he said it's on fire. Prices are going up, and you can see from the results of Pendragon and Inchcape. And you can apply the same strategy to the market cap of Trainline compared to all the other operators, be it First Group, National Express, Stagecoach, or whatever. It's a different dynamic whether people are actually going to be travelling. But you look at the car market. Cycling in to work this morning, there were definitely no shortage of cars on the road. And then people go, well, actually, vans, it's all over for vans. Well, when I was sitting at home and just looking at the way deliveries are going, there's no shortage of vans on the market. So it's just taking what is the new economy, which people talk about, and applying it to old economy stocks. And it could be, and I think there's a lot of value there, but you've got to make sure they can actually get back to growth. Otherwise, you don't want to buy them, because the debt they've got will just erode the value of equity at an alarming rate. They've got to be capable of reinventing themselves and growing.
Yeah, well, I was just looking through some of your portfolio, and certainly, I mean, quite a few of them have done, pretty well on this back of the sort of the work from home and entertainment. You've got, sort of Games Workshop, which has seemed to do pretty well, and the old is that home entertainment, I guess.
Well, I mean, Games Workshop, it's just a phenomenon, isn't it? I mean, you look at it and you go, actually, if someone said to you, this company's on the verge of the FTSE, what do they do? Well, they kind of paint, people buy their miniatures and paint them. And then
Dungeons and Dragons, isn't it, or something?
Yeah. Play a game where no one really understands the rules. But it comes down to intellectual property. They tied up with Marvel, and you can see what Marvel have done with all those characters that Spike Lee invented, be it Black Panther, be it Iron Man or whatever. And can they take Games Workshop to that next sort of level?
And another value one, which is big in your portfolio, is Avon Rubber, I saw, which has done, again, extraordinarily well on the back of sort of like COVID masks, I guess, and sort of like, defence and stuff, I imagine.
Well, the thing is that, if you think about gas masks, they used to have just like one.
Yeah, filter. In the war. Yeah, I remember seeing Dad's Army.
Yeah, so one filter. But if you're in the middle of a battle, you couldn't put your hand up and say, hold on a minute, I need to change the filter. All right, can we just have a timeout?
Sounds like Avon, a car. Yeah.
So Avon invented these masks with two filters. So you can unscrew the other one and the other one's still working.
Yeah.
So the SEALs that shot Bin Laden actually wore Avon rubber masks. Now you can't really put that on. You can't actually put that on the front of the report and accounts. But that sort of homeland security and everything. And people forget Avon was a business going nowhere. It's a value business.
Yeah, I remember looking at it myself, just thinking, what rubber parts? I mean, where's that going?
Yeah, they used to be in tyres. Avon tyres were competing with all the Goodyear and everything, and people said, forget it. And then they just reinvented the business. And this is what equity investing is about a lot, really. It's about not just finding companies which are exposed to new trends or whatever, but it's finding companies which actually have a lot of IP and which have lost their way and which new management have come in. And a good example would be, when I was sitting at home, I read the results of ZAR, which was a stock market darling at 12 quid.
Yeah.
At 30p, they were trading it below the cash in their balance sheet, valuing the business at nothing. And
this is an inkjet printer business, isn't it?
Yeah, and we bought, and the new management had come in from Domino Printing, which has been a fantastic success for us. We sold to the Brother Inc. in Japan.
Yeah.
And we bought 28% of ZAR, and here we are, £1.50. So people will go, yeah, it's all over. It's a value opportunity. You've got to look at it, look at the balance sheet. Can they get through this? Can they return to growth? Do the management have a different strategy? And one phone call, one meeting, done.
And I think ZAR, they've benefited on the back of the Chinese economy recovering this year, haven't they, as well? Is that right? Or because they print jet onto tiles, onto ceramics and stuff.
They used to, and then their market just, they
collapsed. Okay, yeah. And they've reinvented themselves. I must admit, another one, that sort of like that theme of sort of like looking for sort of hidden gems. I mean, I noticed quite good. You've had a bit of a home run on EKF Diagnostics and Renalytics, which is seems to be one of the sort of Chris Mills, Harwood Capital sort of stuff, and it's the best example of Russian doll investing I've ever seen, with EKF spinning out Renalytics, and then Renalytics recently spinning out Verici.
Well, Christopher Mills, is a very, very talented investor. And one area he's particularly brilliant at is this area, diagnostics.
Yeah, and, healthcare.
We followed him into Quantum Pharma when it was on his knees at sort of 50p, and he got bid for by Clinigen. So, he's a man who knows what he's doing. And like me, he's slightly older than me, so anything with a COVID test is obviously quite attractive, I would have thought.
Yeah. So, I mean, I think it's sort of big picture, and just going back to sort of, the question what you look for with investments. But when you mention sort of like, you're looking for companies that can reinvent themselves, have got a lot of hidden IP, seems perfect. Does anything else you look for? I guess you don't go for the sort of the classic cigar butt. You go for sort of the more GARP play, which is really sort of beaten down and has got long-term growth trajectory. It just hasn't been unloved by the city. Yeah,
I mean, another example would be something like M. Brown. We bought that and they had a market cap of 100 million. Okay, and the Lyons family are quite happy to write a check for 100 million now, but 92% is online. Yeah. And I said, well, hold on, you're selling to old people.
Yes.
How on earth they're online? He said, well, look, how's your mum keep in touch with her kids, her grandkids? I said, well, yeah, on Instagram.
We've just, like I said,
yeah, on Instagram, and people wouldn't even think about that. So I'm not suggesting you rush out and fill a portfolio full of these sort of companies. But if you look at Games Workshop, all the performance has come in the last 4 years. If you get
I remember looking at it myself and thinking, oh, do I really want to go into sort of like Warhammer and Dungeons and Dragons and retail? And I should have missed it. And hey, as you rightly say, the brand has paid for another couple of really interesting ones you've done well on. And I've looked at these again, and I mean, you look at lots of opportunities and stuff, and you have to decide where you're going to sort of put your mast into a business. And I missed it, but is MPAC, which does it was down to about 50p at one stage, and it's over 350 it now, which is a high-speed packaging machine, maker. And another one was Alico Soft, which was 8p at one stage, and now is about 80.
Yeah, but MPAC used to be called Molin's, the world leading.
That's right. Yeah.
The shares got to 10 quid, and everyone loved it. And then the market just literally, I'm not going to say went up in smoke, but the market. It fell in hard times, and people were worried about its pension fund deficit. And this new guy came in, Tony Stills, and
yes,
and I just talked to him. Actually, mate, you've really got this.
Yeah,
I'm going to reinvent it into packaging, et cetera. And you look at it and you think, well, actually, he's done a really good job. He's got the pension fund under control.
Yes,
and you could argue the shares are still cheap, because
they are. Yeah. I mean, it seems as though to me, I mean, they've got an opportunity to manufacture the vials and the ampules for the vaccines next year with high speed. I mean, whether that happens or not at all. But another one was Alico, which is a build tech software company. I know it's only a small position. You've only got 3% rather than 20-odd% of the company. But I think you invested with, was it John Ketley about sort of a few years back? And it's sort of like...
I mean, what do Alico do? So, if you ever walk around a house being built and you look up to the rafters and you think, what are those, those metal plates with all the nails in holding the struts together? That's what Alico do.
Yeah.
And they effectively reinvented themselves as a software company, saying, right, we'll tell you where to put the nails, rather than having some builder going, I think it's about here, mate.
Yeah, exactly. Yeah. Design, sort of CAM project management and stuff like that. And you say they've reinvented themselves. Just what sort of like stocks are you sort of like thinking about or really positive on at the moment? Obviously, most of the ones in your portfolio you're positive on. And anything else the investors should sort of run their slide rule of? I mean, I can see a number of them I would be very interested in, but I don't want to put words in your mouth.
I think what I'd have a look at? I'd have a look at Fraser's.
Yeah, okay. Correct. Okay, that's what Mike Ashley.
Yeah, because people always, one thing we look at quite a lot is accounts. So a lot of companies, what they try and do is they try and take the costs out of the profit and loss and put them in the balance sheet, capitalize them, and call them assets. Yeah. And then take the provisions out of the balance sheet, put them in the profit and loss, and call them profits.
Yes.
So what if you read the Fraser's accounts, you'll see that actually the stock provision it made 171 million last year. The stock provision's gone up by 50 million.
Right. Okay.
The onerous lease provision, which most people have as an exceptional item, has gone up by 26 million and is taken above the line.
Yeah.
And it depreciates freehold property over 15 years.
Freehold? Wow. Okay.
And so everyone goes, oh yeah. But so that's what we look for. We like companies where the management have got a decent stake and they're not going to diddle themselves.
Yeah. And you can really trust him, can you, on the corporate governance side?
Well, you see, it's an interesting concept, isn't it? Corporate governance. So what does that mean? So he pays himself nothing.
Yeah.
And he has a worker representative on the board. Now, find me another CEO that does that, and I'll buy 10% of the company.
Yeah, well, I mean, it's one of those things. It's quite difficult for me or investors to wrap their head around, because you do get these instances whereby, I mean, you had NMC Health, which was run by an Indian chap. I can't remember what he was, out in Dubai, which was a high flyer. You had also Wirecard, and then you also had that foreign exchange business, and I can't remember what it was called. But you know,
it was called something like Fiddler, but it was Finabler.
That's it. Yeah, that was. It should have been called that. Exactly. So, how I mean, is it just impossible, just to sort of like be in the wrong place at the wrong time if you get caught up in that kind of stuff?
I mean, we didn't know any of those, but it was quite interesting. Is that, you know, NMC almost appeared to be too good to be true.
Yeah, I know. Yeah.
And what was really interesting was that Muddy Waters, who are you know, Carson Black, the big shorter in the market, wrote a damning piece on NMC.
Yeah.
And was spot on. And Finabler, we never understood the margins. So look, if it looks too good to be true, it invariably is. You don't need to own every stock in the market. You know, there's lots to own. You just find one where actually, can you trust the numbers? You know, has the company accounted prudently? Is the cash actually turning up in the bank accounts? You know, or are they in some sort of racy area where they're capitalising lots of costs?
Yeah,
and making the profits that way. You know.
Yeah. Are there any? I mean, just looking at one, which was sort of like, I mean, it was just been bad luck in the wrong place, but run by Luke Johnson, who's obviously, you know, whiter than, well, it seemed to be whiter than white with old Patisserie Valerie last year. And you know, are there any lessons you can learn on that one at all? Because I mean, it just came really as sort of like, I mean, I remember going past those cafes and thinking, they're not busy, you know. I mean, nobody's and I can't understand the margins, but hey, you know, I mean, I don't know what happened, to be perfectly honest.
So we'd actually sold out about £3.80. So we made loads.
Oh, really?
Yeah.
Oh, well done, well spotted.
Yeah, but then when Luke said to me, look, you know, I've known him for years. We used to be the largest shareholder in Pizza Express, and he said, look, I'm putting in 10 million quid. So, you know, at the end of the day, I follow people, and if they're putting money in, and, you know, it's been a harrowing experience for him. It only cost us 0.3, 0.4 of our NAV, so it's not life-threatening. But, you know, it is a classic case that actually, if never revisit something that's gone wrong.
Yeah, okay. Yeah. What about all these newbie sort of like Robinhood investors which have come into the market? Is there any sort of advice you'd give to these guys? Because they've had a sort of like a roaring bull market that came in March and April. Is any sort of like when the market starts going against you and you make a series of losses, sort of controlling your emotions and stuff like, any sort of like, you know, more general advice you would sort of like help these guys out? Because they've had it basically as a you know, fantastic time at the moment, haven't they? The stock market's got doubled almost.
Well, you know, basically they're buying things on the basis that they hope someone's going to buy it off them.
Exactly. Yeah, I know.
Yeah, when we bought Games Workshop or Zara or whatever, we bought it on the basis that we thought the management team were going to be driving a rapidly increasing rate of earnings, and that was going to lead to dividends going forward. We weren't speculating that this might happen or that might happen. You know, you follow the bulletin boards, and these people are all over these sort of companies. They're not averse to playing transitional energy if the market cap's right. You know, ITM we held, we sold it too early, but at the end of the day, it's still got, I think it peaked at £1 billion market cap. It's got 4 million of turnover. Now, people tell me that is the future. It might be, but I can go and find something else in that space at a lot cheaper valuation. So, you know, basically, you've got to look at it and just look at it on a valuation basis and wake up every day and think, would I buy it now? So if you're not going to buy it now, then you should probably be selling it, because, you know, at the end of the day, stocks for buying and selling, they're not for collecting. Yeah, because the pace of life is changing. Yeah. And, you know, people always say invest for the long term. Well, let me just tell you a little story. I mean, last weekend, my mum phoned me up and said, look, you know, terrible news. Uncle Arnold's just died. Can you come round and help me clear out his belongings? So I was up in the loft and I found this dusty old box and scraped the dust off. It said Uncle Arnold share certificates. I thought, my God, these are going to be worth a fortune. You know, Uncle Arnold, 90 years old. Opened the box, 3 share certificates. Hoover, Hotpoint and British Leyland. All fantastic Oh, it's not a true story, by the way. All fantastic companies in their own time.
Yeah.
But, it's moved on. So
Yeah.
that's it. You've got to challenge yourself every day. Are these the companies that really are going to be here in 5 or 6 years' time and still have the same competitive advantage? And are they at a valuation that I can actually live with?
And when do you actually sell then on valuation grounds? Let's say, for instance, I'm just going to pick some numbers. Let's say, for instance, a share when you buy is 50p the price. You value it at a pound, and at what point would you say, if the valuation still stayed a pound, you would thinking about trimming or buying when it was 150 or when it had doubled? I mean, I suppose it depends on the sort of the risk and volatility of the stock.
So basically, let's look at a real life example. So let's take Dart Group, the old Jet2. Yeah. So we had 22% of the company at about 80p.
Yeah.
And so every time the shares went up, if someone bid us the offer price, we sell a few.
Yeah.
And then the share price would then go up more, or it might go up and then come down, and we buy some back. So that's what we do. We kind of buy and sell shares individually, and over time our stake in Dart has gone from 22% down to about 3%, and the shares have gone from 60p to 18 quid, haven't they? Now, because you never ever bought them all in one go. People think, oh my God, I've got to sell them all now, but you never bought them in one go.
Yeah, okay.
It's a fear. There's a fear, isn't there? There's a fear of selling. So in this game, all these Robin Hood people, whatever, they've all been brought up, like most people in the market, how to buy shares. Buy this one, it's cheap relative to something I found in South Korea. Buy this one, it's been left behind, et cetera, et cetera. But no one really tells you how to sell a share. So, we'll sell a share if the margins get too high. So in hindsight, Zara at 12 quid, making those margins unsustainable. If we're worried about the accounts, then we immediately sell the shares. NCC at £3.60 sold. I mean, we bought them back now. But, as soon as you see problems in the accounts, if they get into the FTSE 100, that's the sell sign. Sports Direct, £8.50, gone.
Yeah.
Bought back at £2.50. And, because at the end of the day, you've got to remember, trees don't grow to the sky.
Mm. And the economy is cyclical, etc. So, I mean, if you buy with a sort of safety of margin, at the start, so you give yourself 30-50% margin, then presumably, are you thinking about trimming at sort of 50% over your valuation or 100% over your valuation? I mean, certainly in the small cap space, a lot of people say, well, I'm going to start trimming, once it gets above a certain percentage of my portfolio, and that may be, double the share price, and I'll run the rest or whatever. But I'm just wondering, have you got a rule of thumb that you use, or you just really play it on a case by case?
It's a case by case. And, so if someone comes and bids above the offer price, we'll always sell a few, because the share price then goes up. At the end of the day, I've got more money in the share than I had at the start. Plus, I've got someone else on the shareholder register who's now interested in keeping the share price up.
Yeah, okay. And it just finally, then, are there any sort of major risks you see going forward? I mean, is it really just going to be COVID and getting rid of that, because the vaccine should be around the corner fairly soon? I mean, anything that you would sort of put your finger on to watch out for investors?
Well, I think, like always, it's the danger of irrational exuberance, isn't it? All this.
So
money.
That's a good one for value investors, though, because if there's a few people bidding the price up, you've got a good bid there to sell.
And so you look at it and you go, all this money's got to come somewhere. Do we have a massive stock market boom, then a bust? Do we go back to, Gordon Brown, boom and bust, the 70s, boom and bust? That deep down, that worries me, that all this money it comes out somewhere, and then inflation takes off, and the problems from the 70s are now reinvented in the 2020s. Yeah,
I could see there is a risk of a currency devaluation somewhere along the line. It just doesn't smell right in the the huge, colossal amount of money we're printing, and it's never money, I think. I cannot see the UK government.
So talking of currency devaluation, right, in my lifetime, sterling has lost 95% of its value against the Swiss franc.
Wow. I hope you bought a chalet in whatever it was, in Lavinia or something, St. Moritz.
It's tragically not, but it's I read that stat the other day and I thought, what? But that really hasn't changed people's lives, has it?
No, it hasn't. No. But it means if you're investing, you want to sort of, in real terms, you probably want UK companies that oversee the exposure, I guess.
But still, look, at the end of the day, if we get through this and then you've got a lot of pent-up demand in the economy, you get what I would call escape velocity. Suddenly, things are really booming, lots of jobs are created again, wages are going up, taxes are going up, you start repaying the deficit that way. And people go, well, actually, it was quite a good way of reorganising our business. A lot of companies I talk to, in the old economy, say, look, actually, we've had 5 years worth of change in 5 months. M. Brown, well, actually, we've changed our whole marketing strategy. Car retailers, well, we've got rid of 1 in 4 people because what were they doing? So that's the big change.
Yeah, I think you're right. Is it a glass half full or a glass half empty? Yeah. I think for a lot of people, consumers, if you've got a job and you're not, you're still in employment, and you've saved 10% of your salary this year because you haven't been able to spend it. If you're a company that likewise has got a future, then you're fine. The big danger, I guess, is the government, because has it got the balance sheet to be able to stick sort of 130% of GDP? And the answer to that is yes, as long as you don't get another major wobble, I imagine. But I can't believe we're going to get.
Okay, 2 things. First of all, the Bank of England is not allowed to finance day-to-day spending by the government.
Yeah, but it is. It has done all this year.
Okay.
Other than for a pandemic and any other emergency.
Okay, and 2, we're arguing with Europe about state aid. What's furloughing?
Well, I mean, I think I think next year when we're out anyway, we could ignore Brexit. We could ignore Europe. I would hope anyway. But I think big picture, I'm with you, Andy. I mean, I'm very positive on next year, and I think moving to sort of like the areas that have still beaten down and haven't got the tech bid on them, you could be well placed. I still think there's great value in UK house builders, for instance. I still 1.2, 1.3 times book. I mean, that's pretty cheap to me. And
the new guy at Crest is very good. I've got a whole Crest. The new guy at Crest is very good.
That's Crest Nicholson, is it?
Yeah.
Okay, and they're basically southeast orientated, aren't they?
They are, yeah.
Yeah.
But if you go back in time, McCarthy and Stone is always the one that blows up, right?
Yes.
Because the trouble is, you can't build one flat. You have to build the whole block. So when things get bad, then you've got too many unsold flats. So they blow up. Then they get bought by private equity.
Which is what happened.
And then after about 5 years, people forget where they are and they come back to the market and do the same thing again.
Yes, so avoid perennial losers.
Well, you just got to be the right time. And Crest Nicholson's a similar sort of company. It blows up, then gets bought by private equity, and then comes back to the market.
Yeah. Okay. Well, thanks very much, Andy. Just finally, is there any place that investors, if they want to put some money into Schroders, where they should go? Is it they have to go through their IFAs? Is it, and then they put money through there?
No, you can just go and buy. You can just buy on your platform, can't you?
Okay.
By the unit trusts or the investment trusts on the platform.
Okay, so just look on the website, Schroders' website, for if they want to go small cap or mid cap UK.
Mid cap, and obviously if you put more than £1 million in, you get one of these gilets. There you go.
Well, in that case, nobody's going to put more than £1 million in. Thanks very much for your time, Andy, and look forward to chatting again going forward.
See you. Bye.